you said you initially were working for in the credit and liquidity side.
Yeah.
Then why did you move to market risk?
Mainly when you were teaching us FRTV, which is a new thing, when you were telling us about Basel rules and all, with reference to market risk, that was quite of interest for me, and I wanted to understand like what technical skills are required over there.
When you moved from credit to market, when you were giving interviews and you were talking to people, what were the key skills that they were looking in you that you're going to be moving into different risk?
Correct. So one thing for sure is, sir, that if you are FRM certified, that's something, or CFA for that matter, at least it will help you.
Suppose somebody is a new student or a candidate who is working in the industry but not into risk and want to get into, suppose, credit risk. I'll take an example of credit risk.
Yeah.
How he can do it basically. If somebody who is not in risk, suppose he's not done FRM CFA, so one way he can do FRM or CFA and then he can try. But which is the team where he can easily get into within the risk management division? Hello guys, I hope everybody is doing good. And today I'm in our own Namma Bangalore and we're going to be doing a quick podcast with one of my student, Hemant Joshi, and he's going to be talking about how to make a career in risk management and specific to credit risk and market risk. Hi, this is Ganesh Nayak. I help finance professionals and students to excel in their career and become a better version of themselves. And I also guide students to clear competitive exams like CFA and FRM and SCR. Hemant, first of all, thank you very much for taking out time and talking to us.
Thank you, sir.
For the benefit of the audience, if you can tell your journey in finance, in risk management, from the day you started working.
Sure, sir. So I did my MBA from Indian Institute of Finance, Delhi, and I'll be very honest to you. When I used to read about Vega, Delta, Gamma, those were the things I never liked.
Okay.
To be honest with you, I never wanted to make my career in risk. But as they say, things that you don't want to chase in life, they will chase you. So what happened was eventually I got placed in a company where I have to look at the primarily the riskiness of the properties that borrower wants to obtain loan against them.
Okay.
So it's primarily relating to securitization piece. So what happened was slowly and gradually I started enjoying that, and because I had a like certification as well as my MBA from finance, that helped me in getting into a risk domain, and I started enjoying that eventually.
When was this?
This is, sir, during the subprime crisis 2007-8 when I started my career.
Okay.
So that's when I actually joined into an organization, and it was eventually I started finding that yes, risk is something where I can make my career, and courtesy you who helped me in getting my the most important certification, which is FRM, and that journey helped me to actually move from credit risk to market risk.
Okay.
So that's one piece that I would give a lot of credit to my FRM certification.
So overall, what is your experience in credit risk in terms of number of years?
I think it is close to 10 years in credit risk, and that includes like, because at one point in time I was managing credit risk and liquidity risk team both. So yes, in total 10 years for credit and liquidity, and then 5 years in market risk.
Okay. So just for the audience, if you can tell what actually a bank would do in a liquidity risk very briefly, and what happens in a credit risk briefly.
Sure, sir. So, and honestly speaking, that's where our FRM certification helps, like the liquidity coverage ratios, the NCFR, all that is like of prime importance for any multinational banks. So what we used to do is, because we were, I was looking mainly from a risk reporting standpoint. So I used to see like how our liquidity exposures are. There were a lot of reports that we had to create for our risk asset liability committee, RALCO, and all.
Yes.
And we have to send them showcasing like how's our portfolio look like, what is the creditworthiness of the bank, who are at the same time I've also looked at from the credit risk standpoint, who are our top customers, who are our customers on watch from credit risk side, and who are our default customers, so that we try and assess. So just to give you an example, like if we have invested a lot of if we have done a lot of funding in say Detroit, which is
Car
honestly
hub.
speaking, yeah. So from that standpoint, we need to understand, like, is this a very risky exposure, considering it is falling into that country, that place, which can default tomorrow. In fact,
Okay.
when Greece incident happened, so we were creating reports on pigs and all. So
Okay.
yeah. So
Okay.
from that standpoint, yes. But yeah, coming back to your question, I know I took a long route there, but yeah. So something which I would say can help you to get into a risk domain is, one, you need to have a very strong sense of analyzing things, eye for detail, ensuring that whatever you are reading or understanding, you back it with some data. Because
Okay.
without that, I don't think so anyone would like to believe you or want to, uh, as in, you will be able, people will challenge you left, right, center, because you will be talking to very senior leaders, traders, from market risk standpoint. So they'll keep questioning you. So I'll give you a rational or an example over here, sir. Once, with one of the leading investment bank, I was looking at VAR and sensitivities,
Okay.
and we noticed that VAR changed, but there was no, sorry, sensitivities moved, but VAR didn't move. So I went ahead and I questioned the risk manager, like, why so? I see that there is enough movement in the sensitivities, but not in VAR. Is there something wrong over here? And he said, no, I don't think so, but probably it's a good thing to analyze right now. So what we did was we look at the time series, and we understood that there was a issue in the data quality itself, and
Okay.
that because there was a issue with VAR at that moment of time for a couple of days, but because there was a data quality issue, we were not able to see that inference of sensitivities in the VAR. So yeah,
Okay.
so all that can come to you only when you start questioning the numbers, start looking at the data,
Okay.
question the status quo. I think those are the skills that will certainly help anyone for that matter. It has helped me.
Okay. And you said you initially were working for in the credit and liquidity side.
Yeah.
Then why did you move to market risk?
I think so, because I worked with credit and liquidity for a very long time. And post FRM, I was actually looking forward to do something in, mainly when you were teaching us FRTV, which is a new thing, when you were telling us about Basel rules and all, with reference to market risk. That was quite of interest for me, and I wanted to understand, like, what technical skills are required over there. And because we were playing with Tableau for our credit risk, I thought, like, what can I do to understand from the market risk standpoint? And by God's grace, there was one IJP that came in our organization. I felt that, okay, probably I'm suited. I interviewed
Okay.
for it, and I got my chance there. But yeah, I would say, like, it was my best decision to get into a market risk domain. I am in market risk from last 5 years now,
Okay.
and I feel that, yes, market, someone who has been into risk space for a long time must experience the market risk side, because it is very it's challenging, and it's very interesting, because you would love to see the numbers, talking to traders, risk managers, uh, looking at capital numbers,
Okay.
asking people, understanding them,
So
data
market risk is
crunching.
more data driven
Yes.
as compared to the credit risk.
Credit risk, yes. So definitely data is of prime importance in credit as well. But yeah, I would say, like, from market risk, the kind of analysis that you need, the data crunching exercise that you need to do, is much deeper in market risk as compared to your credit risk.
Okay.
Yeah.
And when you moved from credit to market, when you were giving interviews and you were talking to people, what were the key skills that they were looking in you that you're going to be moving into different risk?
Correct. So one thing for sure is, sir, that if you are FRM certified, that's something, or CFA for that matter. At least it will help you.
Okay.
To people will see that, okay, you are a, you know something from risk standpoint, because CFA also covers some degree of risk component. So from that standpoint, yes, the certification. Two, you need to keep yourself abreast about the market changes. Like, if I tell you, like, during 2007-8, when I started my career, the subprime crisis happened during that time. For a very long time, I was asked one constant questions about the subprime effect.
Okay.
And post 2007, I think probably during the the I, I think during our post COVID, this one question that has always been there from the standpoint, from operations risk standpoint, like how would you tackle such situations in future? So that's more for a person who wants to make his career in operations risk, not for me. But I have noticed that people
Okay.
keep questioning them about, okay, how were you able to manage that time from operations risk standpoint for your organization, for your people and all. So yeah, I think probably you need to be very well versed in terms of what's happening around, read
Okay.
them, understand them, talk to people. I think these are the skills that would
They were
surely be
looking at
needed.
basically.
Yes.
Okay. And if suppose somebody is a new student or a candidate who is working in the industry but not into risk
Mhm.
and want to get into, suppose, credit risk. I'll take an example of credit risk.
Yeah.
What, how he can do it basically.
Okay. So one thing for sure is, sir, as you know, networking is the key
Okay.
everywhere. So you need to have a good network amongst people, your subordinates, managers, and everyone. Keep looking out in terms of keep talking to people in terms of if there is anything. Plus, keep yourself, as I said, keep yourself well versed about the what is happening, what is the market trend in terms of credit risk or liquidity risk or market risk for that matter. Keep yourself abreast about it. The other thing is, if you can do some small certification, I'm not talking only about FRM or CFA, there are other small courses like NCFM has plenty of courses that are available within derivatives that you can go through, read through about it, and then I
Okay.
think it will help you. At least that will set the context for someone who hasn't
Right.
an experience there, but having some kind of a degree or a certification would certainly help.
Basically, what it sets is it helps you to portray that yes, I'm keen on learning,
Yes.
keen on learning new things. Okay.
Yes.
And what are the tools that somebody should know, tools or software
Yeah.
that somebody should know while getting into risk management, both
Yeah.
market, credit?
Yeah. So, sir, I'll tell you, but having said that, probably the answer that I'll give you now will not be relevant a year later, because when I started my career that time, there was an application called Spotfire, and then we moved to something called as ClickView.
ClickView,
And
yes.
yeah, Tableau was in fashion for some time, and it's still now. But now they say, like, if you know Python, that's something that's of great interest, or that can help you to write some smart queries to extract the data that will
Right.
help you. So what I would suggest is, one, if you can do a short course on Tableau, I understand, plus the Python, that will help you to at least set the context, understand how the data structure is, because sir,
Right.
technology is there for to stay here. You cannot do anything today without technology. So you need to understand that schema, that database, how the data can be extracted, what the linkages would be. So for to know that, it's best that if you can read something about Tableau as well as for Python. I think that should help any
Okay.
new person. But again, having said that, today when we are sitting in 2024 may not be relevant few months down the line.
Okay. And generally, what different kind of people you have seen who are working in risk management? They have come. Is it only that you see MBAs coming in working, or is it only chartered accountants? What variety of people you have seen in risk?
Yeah, I would like to break that myth over here by saying that the people who I've worked with and I've found like they're extremely good in risk, they're primarily engineers. So
Okay.
yeah, I hired one person, I still remember that, and she was an engineer, and I was thinking whether she'll be able to do the work, whether she will be able to understand derivatives and all, because
Right.
we were into market risk. But to my surprise, I think she worked fantastically, because she was able to connect dots much better and much faster as against to someone who comes from a commerce background. So having said that,
Okay.
it is all boils down to the kind of eye for detail and to learn something that matters the most. But yes, uh, I would say people who have done FRM CFA have an upper hand compared to others, and person who understand risk primarily will be able to shine in this industry for sure.
Now, how do you see AI or analytics part into credit and market risk? How big is that?
I think this is very soon. I think making a change, or there's a lot of market disruption that's going to take place because of AI and ML. I think even when I was studying FRM and you were
Yeah,
teaching us AI and ML and all new,
they'd already added
yeah,
that,
yeah,
yes.
yeah. So I believe, sir, yes, certainly it's going to help. There are plenty of things, lot of checks. In fact, ChatGPT has been a great help for a lot of people from technology standpoint, and even for people like us who wants to understand something in detail. Like the other day, I was trying to understand the hedge benefit ratio so I wanted to understand in a very layman terms in detail, and I just put it on ChatGPT. I got a lot of good study material from that, or I could analyze that from with the help of these tools. So I feel that yes, certainly they are going to make a lot of uh, as in it's going to help us in big way. Uh, like if I have to quote you an example over here, sir, then I would say like I have to think though, but let me see. I'll come back to you, but
Okay, take
certainly
it.
on that.
So now with respect to the teams, so when we talk about market risk or credit risk, if you can give a gist, okay, within market risk you have three, four teams, say a middle office or say a stress testing team. What is the bifurcation that you have seen in your career that different teams are available within market risk or within credit risk?
Yeah. So for sure, sir, there would always be, like as they say, there are three lines of defense. That's always been there in all the multinational banks that I have
Okay.
worked with, and they will always have one the front office.
Uh-huh.
Then you will have a middle office, and back office will always be there. Within that, you will see like there's a first line of defense who are the people who interact with customers and who are the ones who
Traders.
actually give the loans and all.
Hmm.
And then comes and I have primarily worked as a second line of defense who will be primarily helping the first line of defense in understanding and assessing their risk. And then we interact a lot with our third line of defense because they are the ones who are going to audit us, look at the
Okay.
reports that we have created, question us left, right, center, because we are into risk domain and a lot of regulatory reporting happens from our side. So we get audited quite often. So from that standpoint, yes. So these are the three different teams that you will see across primarily in
Okay.
most of the banks.
So when we said front office, so there is a risk team, one or two people sitting in the with the trader or basically in their sphere.
Correct. Yes.
Okay. Okay. Now you also talked about regulatory reporting.
Yes.
So how big is a team in terms of regulatory reporting within an investment bank?
Okay. So I have primarily noticed, sir, it's a good number of team, like as in like at least 10 to 15 members who will be around, will be creating plenty of reports because, and that is region specific I'm talking about. So normally these investment banks, how they do is they have region specific reports and all. So
Right.
there would be an APAC region, then EMEA, then you have
US.
yeah, so LATAM or
Huh.
North America. So from that perspective, they will have separate teams
Right.
who will be like creating their reports, looking at the data, working very cohesively with the traders, with risk managers, and then so these are different kind of teams that you.
The reason I asked you this because my next question is if somebody who's not in risk, suppose he's not done FRM CFA, so one way he can do FRM or CFA and then he can try. But which is the team where he can easily get into within the risk management division?
I would say from that standpoint, sir, credit is easier compared to market risk because
Okay.
primarily in market risk they always look for someone who has an experience, and if they are freshers, they primarily pick someone from a premier institute, or they um, look for some certifications within market risk or someone who is CA, CFA,
Okay.
FRM. But credit risk, it's more about where it's just not technical skills. In fact, your how good you are able to gauge things like from your credit assessment standpoint. So your qualitative assessments is of prime importance there as well. So from that standpoint, I feel that that's easier comparatively as
Okay.
against your liquidity or a market risk.
So, have you seen somebody coming from a public sector bank or a private bank who was doing credit over there, some credit assessment, and entering into a credit risk role?
Yes, I've seen that.
That has happened.
That has happened.
Okay.
So I would say, sir, honestly speaking, that's what we always feel that you if you want to get into that career, say credit risk or market risk, you have to have that kind of a knowledge, or you have to have that kind of a skills certification. What I feel is, even if you do not have the certification, or you don't have that background, if you have the relevant skill set, that's more important. Like, do you have stakeholder management? Do you have a negotiation skills? Can you manage a team? Do you have eye for detail? So if you have those skill sets, are you good with numbers, then you can certainly get into a career risk. But yes, what will help you is the certification which will set the ground for you in terms of understanding, so that you feel that yes, you are enriched with the knowledge. Now you, when you question people, you will be able to ask them much better questions, and
Okay.
like will be able to shine in that field.
Uh, what generally companies, what kind of challenges companies face when they're looking at credit risk?
Okay.
Be it credit risk of a trade or say securitization. What is a one thing or one risk that you can talk about?
So I will go back in time of 2008, when the subprime issue was there. I think that's when we noted, and I used to do underwriting at that moment of time.
Right.
So primarily we noticed that the LTV ratios were quite high, but banks were still willing, and we gave our recommendations.
Okay.
So in spite of that, we noticed that some of the loans were dispersed in spite of us giving the information that okay, DSCR is this, your LTV is so high. We
Okay.
give some details around how good the borrowers is or what is his net worth, but still people were willing, because I think that time was such that everyone was looking forward to disburse even the bad loans. So so one challenge that I feel is, one, sometimes you do not get the enough information as well, because primarily someone who doesn't have a long credit history will not be able to give you a lot of information. Plus, when you try to do like when you want to regress the cash flows based on discounted cash flow approach for the next 10-12 years, then do you, if when you are doing that kind of an analysis, you are actually thinking that market will remain some sort of stable. But that doesn't happen in reality, as you know. So we try to do some stress testing on that in terms of the expenses or the income of the borrower. But at the same time, that thing has come in very late in the game. When I started my career, it was pretty much constant, or like okay, you can just make 5% increment here, there, and all. But later they realize, no, that this will not help. We need to actually come up with some stress situation. So I think that was the biggest problem that we were facing back in 2008, that I'm talking about.
Okay. Now, in terms of career, one piece of advice that you got which helped you in your career.
I think one thing that was told to me, sir, was don't buy things at face value. I still stick with that kind of an approach, and in real life as well. If someone says yes, this is what it is, don't buy it, even if it is your manager or someone. If you can make a sense out of it, then go with that. Otherwise, challenge it. Just challenge it, and that has helped me. So that what if thing should always keep coming to you in reality as well. That's what I feel.
Okay. Now we have a final section, which is a fin shot, where you have to answer fast.
Sure, sir.
Okay. What's the most critical skill in risk management?
Stakeholder management.
How would you describe risk management in one word?
Inevitable.
Do you prefer working with data or people?
People.
If not finance, which field would you would have chosen?
Sir, I feel that I would certainly teach, just like you.
Okay, wonderful. So thank you very much, Hemant, for taking out time and
Thank
talking
you,
to
sir.
us. I think so. This conversation is going to be really helpful for the audience who is a part of the our community and looking at our podcast. This will give them good insight in terms of how to be a part of a risk management team. So thank you again for taking out time and talking to us. Thank you guys for watching.